decades of stuff happening in a couple of weeks is what you're seeing, because ultimately the ruble, by extension, is now being backed with natural resources. China is seeing this as well. And it is definitely a threat to that dollar hegemony, which we knew was a tenuous position at best.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're glad to have this returning guest. Craig Hemke is the founder of the TF Metals Report. He's been with us several times over the past decade. He's here with us again today, Wednesday, March 30th, 2022. Craig, thanks for coming back on Liberty and Finance.
Dunnigan, my old friend, it sure is nice to see you. The time marches on, doesn't it? We've known each other for so long now, and boy, a lot of interesting things going on in the world, that's for sure.
Things are accelerating and coming to a head. For those people who have commented under our videos in the past, oh, you guys always say the same thing, or you're always just crying wolf and it never happens, or that sort of thing. It's getting, I think, much more difficult for people who are paying any attention to what's been going on for the past 2 years and now accelerating into the last couple of quarters or even last couple of months to claim that major changes in our lives, whether it's our liberty or our finance, we're certainly seeing a lot of things coming to a head right now. In fact, you were just talking to me before we get started here about the fact that we're coming to the end of a trading month on the major metal exchanges and so on, options expirations, all this sort of thing, physical deliveries. Could you talk to us about what you're watching in the metals markets coming to the end of the month and what you're looking for in the month ahead?
Yeah, it's been a crazy month, no doubt about it. And to your point about all the things we've been talking about for the last decade, the line I've used often here in the month of March is the old line from Vladimir Lenin, who is credited with saying that, decades will go by without much change, and then decades worth of change will occur in a couple of weeks. And it may not be visible to everyone, and who knows exactly how that impacts gold in the short or intermediate term. But there's definitely decades worth of change taking place that, we'll look back upon months from now, a couple of years from now and go, wow, whoa, that was a big point in time, March 2022. In the short term, it's a lot of the same old fun and games that we've discussed in the past. Anybody that trades precious metals or is a precious metals enthusiast is probably aware of. The month of March is the run up to what's called the April COMEX contract. There are 6 contracts as you go through the year that serve as delivery vehicles. I don't want to get into the nuts and bolts of it, but when it's a front month, like April has been the front month since the February contract went off the board and stopped trading in late January, that's where all the open interest, that's where all the trading volume is, that's where all the hedging takes place, that's where all the spread trades are put on. It's 80% maybe of the entire COMEX volume is in that front month. Well, that has been the April contract until today. The April contract is going to go off the board and into its what we call the delivery phase at the COMEX close here on Wednesday the 30th. So everybody's rolling out of that contract and rolling into the June contract, which will now be the new front month. Well, that's always a very volatile period as positions are rolled or taken off and maybe not fully put back on, that sort of thing. So we've known going into this week, this was going to be a really volatile week because of that. The end of the quarter is always a very volatile time in all markets, not just the precious metals, as big institutional money managers and hedge funds manipulate their positions, as to what they want to show they have or the concentrations that they have in things that go out in their quarterly reports. So the end of the quarter is always a very busy time. That obviously occurs tomorrow on Thursday, the 31st. The first day of the quarter is always very busy. Then as positions are put back on that maybe Managers didn't want to show they had. Friday also brings the latest U.S. employment report, which is always volatile, may not be as important at this point as it has been in the past, simply because, I mean, everybody at this point, at least all the mainstream, sell side economists are all talking about, 2 more full percentage points of rate hikes before the end of the year, that sort of thing. We can talk about the likelihood of that. But anyway, all of this is taking place this week. I'm anxious to get into the month of April. I think the precious metals are probably going to have a pretty good month. But I've been waiting for this week to at least get through tomorrow to get it behind us before taking a position with maybe a little more confidence. So it's just a very busy last week of the quarter.
Yeah, that's what phenomenon you talked about, the window dressing, as it's called in the stock arena. Fund managers sometimes like to show that they had some of the leaders in the past quarter's news in their portfolio at the end of the month, and then they'll go back to whatever they have their hopes on as value plays in the next quarter thereafter. Not sure if that also affects their proportion of precious metals, if any do even participate in that. But certainly it has been volatile in terms of maximizing the profit for people who are in positions of influence versus minimizing the profit for people who are not. George Carlin's thing about it's a big club and you're not in it, we're not in it, often seems to be surprisingly or less and less surprisingly as the years go by, seeing how the price of various things can be guided down to just at the point where certain options expire worthless, and the maximum profit can be realized for those who are on the right side of and able to influence that trade.
Right. And to that end, Dunnigan, tomorrow, the last day of the month, brings option expiration for options that are bought and sold and traded in London, which is all kind of over the counter, a lot of kind of private option contracts. So there's really no way of knowing the volume or where the sweet spots are. But they will price anybody that's been trading those. In London, obviously, the big international physical trading center. Those will all price and settle off of the PM London fixed price tomorrow, which is 3 o'clock London, 10 o'clock Eastern. And so you'll see a lot of shenanigans in the London session of gold tomorrow as well. So it's just all those things are those are all things I got to keep track of, in running my site. It's just noise, and like I said, once you get that kind of stuff behind us, if you're a trader, you feel a little more confident in what you're seeing. And, maybe you don't have those extra layers shenanigans that working against you.
Also going on right now, besides the end of the month, end of the quarter, are a bunch of repositioning by major geopolitical forces about currency and commodity transactions. Russia is kind of at the center of a lot of moves, and China on some of them as well. As far as saying that they're only going to sell energy to Europe, for example, in rubles rather than in euro or dollars, and also establishing trading relationships, pegging the ruble with gold for at least a while here. Can you talk to us about what you think people need to know about what these major moves by Russia in particular regarding the ruble, regarding gold, regarding energy, need to be aware of, and what we need to be aware of, and how they think it's going to impact the future of those markets in the near term?
Well, let's start with the big picture in something that we've discussed since we've known each other on countless occasions, and that's the idea that the U.S. dollar is the world's reserve currency and has been since right before the end of World War II. And because the U.S. had the gold, 22,000 metric tons, we had a functioning economy, and those two things that nobody else in the world had. And so you needed a currency that people could confidently trade in as the world built back from World War II, and that was the U.S. dollar. And that gives still to this day. The U.S. was, Secretary Connolly, the guy that was in the front seat with President Kennedy in Dallas in '63, his term, we called it the exorbitant privilege. It meant we could print as many dollars as we wanted. And a lot of times, to fund our military, to fund our social programs and everything, we now run up $30 trillion in debt, but those dollars haven't stayed here in the U.S. to create massive price inflation. Well, I'm kind of seeing some of that now. Mainly, we've shipped those dollars overseas because the world rebuilt, right? And, we've shipped our manufacturing overseas to create, demand for dollars as well. We buy stuff from China and send them dollars in return, or India or Brazil or whatever. Well, it has always been known, and again, like I said, we've discussed this for a decade, that there are advantages to having that level of demand for your currency. And so it would be logical that maybe China or other countries, maybe, I don't know if they can be the sole reserve currency, but they can certainly take steps to shore up confidence in their own currency to create that layer of demand that the US dollar has enjoyed for the last 8 decades. Okay, so now with that said, let's think about Russia and China and the dynastic view that they have of things. We've known Russia has been concerned about Ukraine since 2014. I mean, and even the run up to all of this, the U.S. admits now that Russia was moving forces, artillery, tanks, everything toward Ukraine beginning in October. So it's not like, Putin just woke up a month ago and said, hey, let's go bomb Ukraine and see what happens. Okay. They've had a plan here. And as part of that, they obviously thought through all of the potential ramifications of what they're doing militarily. I mean, they would not have just started lobbing bombs and rolling people into Ukraine and just figured, well, we'll see what happens next. They anticipated what the West response would be. I mean, that's why they know the West will attack if they attack Poland, for example, or any of the NATO countries. So they haven't. Okay. So they know that. They also had to know that the US and the EU would take all these financial moves against them, because really, what else can the US and the EU do? Like cutting them off of SWIFT, placing all these other sanctions, seizing their foreign currency reserves, all the things that the US has done. So they had to know that was at least a possibility, if not a likelihood, to this military stuff. And so Russia then has acted, again, in their own self-interest with the next move on the chessboard, when they announced a couple of weeks ago, I guess it was about a week ago, that beginning at the first quarter, April the 1st, they would only accept rubles for their natural resources that they trade primarily in Europe, their natural gas, their crude oil, all their other stuff. Now they also said, hey, we'll take gold. We might even take Bitcoin. But to begin with, they said we'll only take rubles. Well, what did that do? I mean, the ruble just absolutely crashed against the dollar back on the weekend of March the 5th and 6th, when the U.S. announced these, that they were expelling Russia from SWIFT, cutting them off, and seizing the $300 billion in foreign-held foreign currency reserves. The ruble crashed. Well, guess what? The ruble's almost all the way back to where it was in late February now, because the market is adjusting. These European countries are adjusting. They're having discussions today as we speak between the German finance minister and Russia about, okay, how can we do this? How can we get our hands on some rubles so that we can continue buying your natural gas, because we've only got 25% of the normal reserves that we would have. I mean, it's I don't want to call it brilliant because it makes it sound like I'm on Russia's side, but it's a logical move on their part. Any objective observer could see why they're doing it. And what they've done now is the U.S. tries to decimate their currency and their economy through these sanctions, and Russia just came back and said, not so fast. We're going to make you buy our currency if you want any of our natural resources. That bids the value of the ruble back up. It is a very fascinating chess game to watch play out, really on a day-to-day basis. But like I said when I began this long monologue, the big picture part of it, the decades of stuff happening in a couple of weeks, is what you're seeing, because ultimately the ruble, by extension, is now being backed with natural resources. China is seeing this as well. And it is definitely a threat to that dollar hegemony, which we knew was a tenuous position at best. And so it's, like I said, very interesting to observe all this, and very important for people that are invested in the precious metals to be making note and watching this play out.
Well, you don't have to be a cheerleader of any particular jurisdiction to say that you can see a shrewdness and prudent gamesmanship when you see it. And specifically, the one point I wanted to emphasize about the whole story you just described was the power of any individual or organization that has something that's real, that has a needed and high utility tangible, whether that's energy in this case, whether that's certain minerals. There's all kinds of special needs in the new electric economy for all kinds of minerals, lithium and cobalt and all this other stuff, silver and gold as well. So if you have something that's arable farmland, et cetera, if you have something that's real, you have the ability to use natural bargaining power in your favor, rather than people who just have something that's illusory and games and based on threats or whatever from the past. So that's I think very eye-opening and very educational for us to see how you're not helpless when things go against you from the very powerful forces if you have something that's real.
Dude, all the way to the individual level. No doubt about it. And again, getting back to, what I was talking about this Bretton Woods system from the end of World War II, the U.S. had the power because we had the manufacturing base, we had the agricultural base, and we had the gold, right? Now what do we have? We have bankers and we have debt. Okay, that's not a very firm foundation, because bankers and debt, that can all implode and go to zero. Well, your natural resources and your gold and everything else, no, that's real stuff. And that's where the ultimate power lies, as the pendulum swings back toward where it was 80 years ago. And then you mentioned how that implies that to the individual basis. And this is critical. Again, another topic that you and I have discussed ad nauseum over the years is the war on cash. And you're seeing that play out now, not only with these central bank digital currencies where they don't want to have any cash at all, but they try to say physical cash is just, only used by drug dealers and bookies and stuff like that. But what about the poor people up in Canada? Oh my God, you give $20 because you wanted to, you don't like that these vaccine mandates. You give somebody $20 and now all of a sudden your bank account is frozen. So you get sideways with your own government and they can cancel you. Well, okay. That might augur to having some physical assets of your own. And so this all, this all just comes right back. People say, like you led off, Dunnigan, and said, oh, these guys, they just talk about stuff never happened. Well, you look pretty close. This is all happening. And if you don't own any of the physical assets yourself, you better get on the blower with our buddy Andy and get yourself some while you can, because it is your own physical, protection. It's your own physical wherewithal, just on a much smaller scale than what these countries are talking about.
Yeah, I know that another aspect, and one of the favorite quotes I keep thinking of, that we interviewed author Wayne Jett. He's the author of Fruits of Graft, Great Depressions Then and Now. He's a constitutional attorney, but he's also a student of history, and he draws all the parallels between the Great Depression of the 1920s and 30s up to the current day, and how it was fomented, deepened, and worsened and lengthened by the powers that be for their ends to crush the middle class, and that is happening again. But one of the quotes in there that sticks with me is he says, by natural right and by natural law, the working man should be able to take the fruits of his labor and put it in his pocket for his own free and private use in the future for whatever purpose. And what the bankers have done is made it so you can't put the fruits of your labor the working man can't, in his pocket. He's got to put it on a piece of paper and put it in the banker's pocket, and the banker will do whatever they want with it from then on. So it's a violation of natural rights and natural law. And there's another reason to opt out, because you don't know what restrictions and theft, covert or otherwise, you might be subject to in that role. Could we talk a moment about the strange phenomena that's going on with, I guess I'll focus on silver. It probably affects other metals than silver. We certainly saw the nickel market blow up about 2 weeks ago. But silver, we've had this curious announcement from the U.S. Mint that they're going to stop production of U.S. silver dollars that they were producing because they can't get the planchets, the blanks, at or near market prices for silver. So this starts to shine a bright light on it. Wait a minute, let's talk about that for a moment. They have a constitutional mandate. They have, by law, they're required to mint coins at a rate that keeps up with the public's demand for the coins. And yet they're stopping production of the coins, claiming that because we have another law that says we can't overpay for physical, all kinds of things, including supplies, materials, the raw materials. So because we can't purchase silver close to spot, we're not going to make any more physical coins for the gold, silver dollars. Can you talk to us about what's this revealing? And in parallel with that, I want to meld one more thought in with that, is that the spot price premium above spot starting to creep up for physical possession of COMEX 1,000-ounce bars. According to David Smith from the Morgan Report, he says he's not seen that in 41 years, where the premiums are rising for the COMEX 1,000-ounce bars are supposed to be the thing about which the spot price is referring to, that you should be able to access those. And now the fact that the premium above, there's this rising premium every week. It's been rising now for the past several weeks above the spot price for COMEX bars. So in my mind, those two are joined at the hip. What's going on with the spot price separating from physical, and how is that affecting mints?
Well, you touched, I mean, that's one of the questions I get a lot, and I'm sure you have as well. Why are Eagles at $40 each? Well, that's why. I mean, there just aren't any, and that's what the market is paying for those right now. And it may continue that way. And it is certainly telling that the mint can't lay their hands on enough blanks. I mean, where do they get them? They're blanks they get, Andy would know this, the guys that run the dealers know, is it Sunshine Mint? I mean, somebody makes those things for the U.S. Mint, and they obviously can't get their hands on them. Look, there are two things in play here. One is this price that is set through the trading of derivatives, which has no real connection to the actual physical metal itself. Oh, they try to, they want to make sure the price is somewhat close to it, but we've seen massive disconnects from time to time. You go back to March of 2020, where the COMEX price went to 12, but you couldn't buy physical metal anything less than 24. So that, it's not outrageous that thing disconnects. They've got to keep it somewhat close to make it seem legitimate. That's one thing that is always in play there. But the physical market itself kind of hangs in this uneasy balance off of that price. Now, there are those that I question conflicts of interest they may have, but there are those out there that say, oh no, there's billions of ounces of silver in the world, and they count grandma's candlesticks as part of that above ground silver supply. And I don't doubt that at some point grandma's candlesticks are for sale, but they're not for sale at 25, right? And so the whole market kind of hangs in a balance, kind of hand to mouth, in that the globe, even if you count Russia and China, produces about 880, maybe 900 in a good year, million ounces of silver a year. And you get some recycled amounts that come in. Just to keep it simple, let's call it 100 million ounces. Well, the world consumes industrially, just at present, about 600 million ounces a year, which leaves the leftover, the 400 million, for investment demand. Okay? So what happens when investment demand soars, and all of a sudden, big companies, big industrial users of silver decide, wait a second, we better get our hands on some. There appear to be shortages, and so they up their demand. Investment demand goes up, and then you've got potential supply disruptions. I mean, Russia produces, 80 million ounces a year, 40 million ounces a year, I think maybe is what it is. All of a sudden, you got some supply, and all of a sudden, that whole equation gets thrown out of whack. You got way more demand than you have actual supply. And that is what is one of the more, let's say, compelling dynamics in the silver market. And again, that's what you're seeing just the first hints of in this stuff with the U.S. Mint. It's going to be a fascinating remainder of the year because, again, I don't see a lot of relief coming to the markets in regards of, how it relates to silver. Again, you've seen that play out. You mentioned nickel. Zinc has gone crazy. Copper is butting up against its all-time highs. Aluminum is going like mad. All these other base metals are experiencing much of the same issues. Silver just hasn't broken out in price the way those others have yet.
This last question will probably bring a smile to everyone's face. Tony says, ask Craig if he were to become King Hemke, what would be the first thing he would change?
Boy, the first thing I would change. Politically, I would liquidate the Congress, and I would demand new elections for every single seat immediately. How's that? That's the first thing I would change. I would dissolve Congress and schedule where nobody that had a seat could run again. Okay, so we'd have to completely put in new people. That's the first thing I would do if I was the father of the new country. I would also demand some type of hinging of the currency to keep us from getting in this position again. Whether it's backed by gold as it used to be through 1971, and that demanded then some fiscal austerity. That would be the next thing. And then I'd have to address a few other things that are of interest to me from there. But I think the first thing I would do is I would dissolve Congress and immediately call new national elections where the incumbents that were in Congress were not allowed to run again.
With all the talk, we attended, Elijah and I we attended the Ron Paul Institute Peace and Prosperity Conference in Washington, D.C., and we heard speaker after speaker, whether it was Thomas Massey or whether it was Ron Paul himself or others, talking about the deep state. And one of my concerns, even if you change the set of actors in the roles, if they walk in and they get told in the first day or the first week, here's how things work in Washington. This is the role you're going to play. You're not going to ask these questions. You're not going to talk about this. You're not going to rock the boat over here. Okay, now you can, as long as you stay in this box, you'll stay out of trouble and you'll get some pretty juicy ability to do insider trading. You'll get all these lobbyist perks and everything like that. I'm not sure that just changing the names on the desks is going to fix the system unless you end up with some real mavericks who are willing to basically take on a manly stand, or don't mean to be sexist about that, but to take on something that's both principled and courageous and buck that system, which is a very deep system.
Let's put this in on step 1A and go all Ross Perot on you. We're going to eliminate 80% of the budget for the State Department. And that means we're going to eliminate 80% of the people that work for the State Department. What do we need them for anyway? Hey, that wasn't a bad Ross Perot, given that was 30 years ago.
Yeah, that was scary. Yeah.
Yeah, thank you. I appreciate that. That's kind of showing my age, I suppose. So, yeah, well, that's the other thing. We'll just fire 80% of the people that work at the state. What do we need them for anyway? Maybe that'd clear it out. I don't know.
Well, certainly when you look at the Constitution would be a good starting point, because the Constitution tells you what government's function is supposed to be. And I think way more than 80% of the current function is not in the Constitution. So
you mentioned natural law, right? That's why written in the Constitution, money was supposed to be gold and silver.
Yep.
Because those guys, they knew the nefarious, once the bankers get their claws into you, their talons into you, they don't let go. And that has to be rooted out too. That's
one of the reasons we're here doing this right now. You and I taking time away from whatever else we could be doing in our lives is to try to get the word out so that people know that for the good of each person, each family, each state, each beloved country around the world, we're all people and we all have those common desires to take good care of our families and our futures. And we have a natural right to, and that's definitely being interfered with on an accelerating basis. It's coming out of the shadows and into our faces as far as encroachments on our God-given rights and liberties. We're here to try to cry foul where we see that happening and give people options for steps that they can take that are within their power, because it's not within our individual power necessarily to topple these huge powers that be, but we can certainly make individual choices that together can make a big change. In fact, I was just speaking with Alistair McLeod after we got off the interview just now, and he was talking about a future article he's going to write, and on our future interview we're going to talk about is that the faith and confidence of the ordinary people is all that a currency has going for it in this world. All currency of the world, until maybe in Russia's new gold-backed ruble, have been divorced from anything real or tangible underneath them almost entirely globally. And should people decide, I don't like being tracked. I don't like having like what happened in Canada, you mentioned, having my assets frozen, my ability to be a person who can transact in this economy being deplatformed just because I have ideas or thoughts that are different from those that are being sanctioned by those in power. Maybe I don't want to use that currency. If people realize that the power is within the hands of the people to walk away from a currency that's taking advantage of them. So any final thoughts on that before we let you go?
You know what? You made me think I should turn that back on Tony, who asked that question, and just remind Tony, and everybody else is listening, that you're your own sovereign. You're your own king, right? You don't have to wait for King Hemke. Take charge at your own personal level. Claim your own sovereignty and pay attention. Educate yourself and make sure you are prepared way better than the other 99% of the people out there for anything that is coming over the horizon. Be your own sovereign and take charge of your affairs before anybody else tries to do it for you. Well said, Craig. As always, thanks for joining us here on Liberty and Finance. People need to find you where? Right there. 12 years. 12 years of TF Metals Report, man. It's funny. I was thinking about this. I think it was just last night. I was doing the dishes. I was thinking about, I like to claim that I add all this value to my site. I don't even know how much. I mean, I know people read the stuff I write and they listen to the podcast, but I think the members of my site just like the site because it's a place, it's like a ship in a storm. It's like sanity. It's like-minded people, not politically, just like-minded people, their own personal sovereigns that have a place where they can go discuss stuff, without feeling like they're going to get canceled, or, Twitter's going to ban you or whatever. So anyway, but we do try to keep track of everything else that's going on in the world too. So tfmetalsreport.com. I think anybody that took the time to listen to this today would probably find the site to be pretty informative and helpful. Yeah, when you mentioned people, why they like being together on your site, I think it's about being able to speak freely and be sane in an insane world. So you can really help keep your feet on the ground and your head straight about where we're likely to end up next so that we can be prepared for that. And that's what we're about here too, be aware and prepared. Craig, as always, thanks for joining us on Liberty and Finance. Always good to see you, my old friend. We'll have to do it again soon.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.